Good morning, everyone. This is Daily Trading Analysis with a weekly recap in which we are going to review the economic data for the week, all the Jerome Powell details for the Jackson Hole Symposium speech, and also perform technical analysis from top to bottom on the Nasdaq, on the financials, on the big tech companies, and also on the dollar and yields. This is this weekend's weekly recap content. So we are going to start reviewing the economic data that most impacted the week. On Tuesday, we got existing home sales continue the drop, minus 2.2% month over month. Home sector is continuing to cooling down, and demand is also lower due to the 30-year mortgage that came out on Wednesday with 7.31. Remember that we were below 7, and we then, since July and into August, we are seeing higher interest rates and also mortgage rates increasing. The new home sales month over month still mostly in the positive, but as you can see, it's flip-flopping positive negative due to these mortgage rates also flip-flopping in the interest. And also the PMI showed cooling down of the global services PMI. This is flash, this is an estimate advanced reading, so take it with a grain of salt, but still manufacturing still contracting, lowering the 49 expected to 47. Composite in the 50s, and services coming down from 52. We were expecting also 52 to 51. These were good news. Thursday, durable good orders in the negative, huge data, and initial jobless claims came also lower than expected. And finally, on Friday, consumer sentiment getting crashed 2 points. We were expecting 71 and we got 69. Remember that consumer is holding the economy right now. So consumer sentiment going lower, it's a little bit concerning in terms of spending, but will also help beating down the inflation. And finally, at 10 a.m., we got yesterday Fed Chair Jerome Powell talking at Jackson Hole Symposium, which we are going to review right now. So Jerome Powell at Jackson Hole Symposium, key statements were that persistent above trend growth could warrant tightening. This is basically relating growth with more hikes, because continuous growth, continuous resilient economy could make that the Fed will continue hiking rates to really cool down the economy, because they are not seeing the impact of higher interest rates. So remember, growth could warrant tightening, and markets' only purpose is to look for continuous growth. So we have here a little bit of fight between markets and Fed's goal. The Fed is prepared to raise rates further if appropriate. So they are willing to continue raising rates. They are not seeing risk in doing so. Certainly will impact the economy, but having this resilient economy opens the door for more rates if appropriate. We intend to hold rates at restrictive level until confident inflation is moving sustainably down to 2%. 2% is still the target, despite the fact that at some point I think they're going to discuss raising this 2% to higher long-term rates for inflation. But right now, Jerome Powell is still talking about 2%, so 2% is still the goal, the target. And until they see sustainably down movement, they will continue holding rates at these levels. So no interest rate cuts until then. And finally, the Fed is attempting to signs that the economy is not cooling as expected, despite the fact that some media are saying that economy is cooling, inflation is going down. The Fed is not watching, is not seeing that. We are in a position to proceed carefully. They will proceed carefully, data-driven, but they are seeing that the economy is not cooling as they expect. So basically, what this cause into the market, apart from the technical movements, this is interest rates probabilities for future FOMC meetings. And look at this, surprise, surprise. For November and December this year, these are seeing a 25 basis point interest rates. This is a huge change of sentiment, a huge change on the analyst expectations, because these 46 and 45 for November and December respectively, they were 30 something on Wednesday. So they pushed 15 points and they are now the biggest probability at 550, 575 with a 25 basis point increase in interest rates. This is huge. And then also this 39 is also increasing, and also 30. Markets are still dealing with the fact that holding rates at this 550 will cause a huge impact, a huge pain on the economy. So they are thinking about start cutting rates again in January, but cutting rates from this new 550, not the 525 that was for weeks. So look at this. The picture completely changed. We were at 525 until May, and June start cutting rates by 25 basis points. But now markets see 25 basis points in November or December. Huge change on this. And this is worth noting. So now that we talk about interest rates, we talk about economy data, we are going to jump straight into the charts. And I mentioned that we are going to perform analysis from top to bottom. We are going to start on the Nasdaq on the monthly chart. We are now at 26th of August. There's only 2 or 3 trading days left for the month of August. So it's worth checking out if the monthly candle is appropriate on the pullback. And as you can see, we were down here. This was the October bottom, really big level at 11,000, really huge structure that we broke out with a huge candle on March. And on March, everything went nuts. 1, 2, 3, 4, and 5 months straight in a row in the green for the Nasdaq. Huge push. And I had a fib retracement hooked at this May candle that we broke this pivot. We can also do it like this, but I think having this really big push on this candle, I think it's better for us to really see the big movement. So 3 candles, 1 pullback for the monthly, and we are seeing a potential fib golden pocket retracement around 14,200, 14,300. If we go to the weekly, now analyzing this week's performance, as you can see, after 3 weeks of red, we are still seeing a green candle, but a huge, big rejection of 15,500. So we might see like a move like this that would make a continuous downtrend pullback, consistent pullback into one support level around 14,200. That level, it's for sure I will be watching that level, and I think this level is worth watching in the future. But right now, in terms of performance in the week, we are seeing a little bit of weakness, continuation, not in the red, but continuation seeing selling pressure. We go down to the daily. We have this double top on the daily for July and the beginning of August. And this huge, I will call it the Nvidia day, huge retracement that caused this week to be this rejected in the green. So the golden pocket turns out to be around this big push. And if we go to the NQ contract right now, in which I have more details, you can see this ascending support, this ascending higher lows, higher highs until January. This was January 2022 levels. We tapped that level 16,062, and we completely rejected that double top, basically rejection of the ascending trend line. And we are, look at this pullback. This pullback is not really big like this candle. It's a consistent slow grind lower. We got as this bottoming tail that formed last week low, that's the blue dot line at 14,600. we pulled back and we got the Nvidia day crashing on us. So I do see some potential down to retest last week or this week, but I don't see Nasdaq continuing lower below this pivot here at 14,444 out of force. I can see Nasdaq just checking again this pivot and start making structure here, support around this market structure with this pivot. And from then, we can start fighting again a movement up into this downtrend that we are establishing from the July highs. So that's the daily. And if we go to the 30-minute chart to analyze the Nvidia day on Thursday and Friday's movement, I remember I talked in my Thursday videos about this level that we held even in the Nvidia day, the Nvidia sell-off. We just got us supporting this 14,800. And if we check the 1-minute chart, it was really big. This was the Jackson Hole, the Jerome Powell speech. We go lower and we basically do something that I really like, that is a big push on volume of the bottom of the lows with a pre-market pivot like this. Pre-market lows, we do a higher low and we push point of control. That was a sign for, not for longs, but for me, that some weakness was starting to disappear and some longs were taking positions. And look at this afternoon push. This was beautiful. So this end of the week push, I mean, I'm thinking about this structure that we are going to retest. This looks to me that I look below and fail. And let me tell you, the weekly looks really weak. The daily has some potential for a double bottom of this pivot. And checking the 15-minute and also the lower time frames, the spike into the afternoon, testing, not breaking high of day, but testing this initial sell-off from the Jerome Powell, makes me think that some kind of strength was left in there. Perhaps for next week, we can, as I was saying on the daily, we can see some double bottom structure down here, and then we can move towards the pivot on this descending trend line. That would be my plan for next week for the Nasdaq. So now let's talk about correlations. And correlations, I always want to talk about dollar. So dollar on the daily still looks good for the 105 test. We have been seeing strong dollar against the stock. The dollar was strengthening while the stock market was pulling back. And we got us in this 103, which this was the Nvidia day, and we continue higher. A little bit of a dodgy indecision candle here, but the dollar is approaching also this structure of rejection, and we are breaking out this descending trend line on the daily. So I still think strong dollar might impact stocks to the downside. So really watch the dollar, because it may have some power left inside to really affect the stock market in a bad side. So watch dollar, and the 2-year yield is continuing higher now that Jerome Powell it's opening the door to more rate hikes. And as we can see in the FedWatch tool, we are seeing analysts pricing in a little bit of probabilities for a 25 basis points in November or December. Yields are moving higher more substantially. 5% is left behind in the 2-year yield, 10-year yield. This was the Nvidia day, June 2008. Remember this level, 4.36 in the 10-year. It's insanely high. A candle, dodgy candle, indecision, balance, And who knows, the $10 might continue lower and do like a bear flag to reach 5.2 or something like that. But the 2-year yield that is more related to the Fed hiking rates, I mean, watch the dollar and watch the 2-year yield, because this might be a disaster. If we break the 5.1 and start going again, pushing this rejection and talking about 15-year highs, I mean, this is going to freak out the market for sure. So dollar yields, what else is important for me to review? Financials, banks were mixed this week. We are seeing a pullback, more deep pullback and rejections from the 200 daily moving average on XLF. And this is quite concerning because banks are a big part of the S&Ps, and in order to claim that you have a resilient economy, you need banks to really sustain the moves, sustain the outflows. And higher interest rates, apart from giving them a lot of revenue, those are also crashing some of their investments. So be really careful, because banks are going to suffer more if we are going to see higher interest rates, and that's worth watching. XLF worth watching. Bank of America, look at this pullback. JP Morgan, big pullback. Wells Fargo, everyone is pulling back, and regionals are also pulling back. So remember that interest rates also affect banks, and banks are big packs on the index equities for the S&Ps and also for the, not the Nasdaq, but Nasdaq is part of the S&P. So if banks are bad, S&Ps could not grow as expected, and Nasdaq will lag behind. So take a note on banks and financial sector, because that's going to be really interesting. In terms of sector funds, I would like to check the weekly sector fund performance in order for us to really gather insight on if we are seeing rotation to defensives. As you can see, this is the 5-day performance. XLK, this is the Nvidia really sell-off. XLK 2%, discretionary. XLY plus 1%. Real estate and communication. So there's still risk on the sector fund performance. XLU to 0.22, almost flat. XLF flat. We have XLV also defensive in the negative, and staples in the negative. Look at this, it's flat line. So the profile in the markets right now for the week, still risk on communications, real estate, discretionary, consumer discretionary, and technology. Let's talk about the 10-day performance. Again, same picture for the technology, but we have some kind of creeping utilities and healthcare still in the negative, but in the 2-week scenario, the performance still for risk on assets for technology. Technology is seeing a lot of inflows due to Nvidia, but we have to see if this is continuing for next week. So getting back to the charts, we are now going to talk about single stocks, the big tech stocks on the daily. Quick day analysis. Apple is pulling back. Nvidia day pulled back a little bit more, but I think about this. This was a clear down day, gap down, consolidation, continuation on the bear flag, but we stopped here, and this was a look below and failed. We are still holding the upper band of this consolidation at 176.50. So Apple is not as bad as it may seem. We are still rejecting. This is the 20-day moving average, the SMA, the 20 SMA on the daily. So Apple is still holding this level. So as long as we remain here, and if we continue lower towards this gap, we might see some more weakness on the Nasdaq, but Apple holding this level is certainly a little bit decent and a little bit more strengthening, not bullish, but at least it's not bearish at all. Microsoft, the Nvidia day rejection for breaking the 20-day was a fail. Again, this pivot of the structure down here at 312, and it's in the middle of the range, so patience for Microsoft. Tesla, it's basically, it pulled back from this daily level at 240, continuing from the slow grind lower. We accelerated, we did a gap up, and we are holding that gap with, look at this, 1, 2, 3, 4 daily candles in a narrow range, pushing a little bit towards a ascending triangle into the break of 240 and the 20-day. That might be worth watching for Tesla. Amazon, consumer discretionary, look at this. This is partial gap fill for Amazon that we are going to adjust, and quite a bullish candle, honestly, because Amazon is quite heavily into XLY consumer discretionary, and I think this one reflects the kind of late spike into the afternoon that we saw on Friday's Nasdaq. So this is quite good, but still, this red candle, it's quite concerning. And if we start seeing the Amazon going towards this big support at 126, I mean, this might be more bearish and concerning. So right now, Amazon showing a slightly bullish candle, but we have to see for next week. Google, after the Nvidia day, big sell-off. This was a nice push. The gap up from Google towards 124, 134, breakout for the July pivot. It was a failure. It was a pity because Google was really looking nice for a breakout towards April 2022, 136. It retraced, but same as Amazon, holding this support after the gap up on earnings, and we are holding 128 with a bullish candle, bottoming candle. So Google and Amazon on the same side. Nvidia looks really bad, honestly. We tapped the previous, this is the dashed orange line. The previous all-time high was rejected, pushed, and into the earnings, the blowout sell-off. And this candle is just indecision from the top and from the bottom, but the big red body tells you something. And I think Nvidia can see more downside. Minus 2.43 on the day yesterday. So really careful. Finally, Meta. Meta is also showing a double bottom towards the bottom line of this structure that we have on June. And the Nvidia day, it's almost pushed that up. And I think we need to see this 290. 290 is quite important to see the upside towards the 20-day moving average, and the squeeze towards the Nvidia day, the big red candle. Meta looks quite interesting, the same as Google, Amazon, Apple is in the middle, and Microsoft it's also in the middle. But Tesla also looks quite possible for a 240. So I can see the big tech companies pushing up on a little bit of strong sentiment next week for the Nasdaq, and I'm thinking what will be a quite interesting week ahead. So really tune in the channel because I'm going to review those in detail. And I think finally I would like to see small caps. Look at this, small caps pushing the S&Ps, red candle but dodgy with a really big bottoming wick. And it's not bearish, it's not bullish, it's just in the middle of nowhere between this level and this level, so nothing else. And for the ones trading Bitcoin, I mean, these charts tells you a lot of things. And I think the first thing that you see is that this huge push, consolidation, trying to go higher, rejection, push, and the sell-off. Bitcoin has nothing for me. I don't want to trade Bitcoin, and I think Bitcoin is really dangerous for a big blowout sell-off below 25,200. This level is quite critical. And after this sell-off, I mean, I wouldn't want to trade Bitcoin to the long side. This pertains to the risk on assets, but I think Bitcoin has its own scenarios, its own environment. So I will just going to review this, and it looks really bad to me. So, and I think that's all. In summary, I'm looking forward next week to really see if the big tech companies can squeeze a little bit higher. Some of them have really nice setups, strong setups, and at least supporting setups with structure. But honestly, I would like this pivot to be retested for a move higher. That would be my best. Even this pivot at 14,444, this structure is quite important for me in terms of support, and I would like buyers to step in at these levels. So if Nasdaq goes down here below 14,500, I will be more willing to take a stop long if buyers step in and I see cumulative delta, some open interest building, and some things like that. So that's my forecast, my analysis. I hope you like this video, these weekly recaps. My goal with these videos are for you to really, if you skip my daily videos, don't miss the weekly recap, because those go more in detail and provide more insight. And if you are following me on the daily videos, the weekly recap is more than welcome for you, because I think it provides a summary of your opportunities, of the performance of a lot of sectors. I cover a lot of things for other markets to really find the edge. The edge is the most important thing, to really see if the sentiment you have on the inside matches the sentiment that the market has. Because if your bias is short or long, but the markets it's against you, you have no success at all. You have to really understand where these markets are going, where are these stocks, these indices, the forex, the interest rates, the sector funds, all these has a sentiment, and you want to go with the overall market. You don't want to go against it. And despite the fact that some media, some news want you to do certain things, you really have to take your own analysis, and I'm here to help you understand some of these nuances, some of the details. And if you learn something, if you are if you're learning something, if you find something useful, just give it a like, subscribe to the channel, and I will be glad to continue doing this kind of videos, because for me, I love trading the markets, I love teaching, and I love helping anyone to understand these markets, and who knows, perhaps trading them and earn a little bit of money. So if you found this video useful, please give it a like, subscribe to the channel, and follow me on YouTube, because I think it will be quite useful for you if you are trading the Nasdaq and the S&Ps. So thank you for your time. If you found this video useful, thank you. Hope you had a nice weekend, and remember that discipline and risk management are key for success. Stay safe, everyone. Have a nice weekend. Enjoy your weekend. Take rest, and see you on Monday for next week. That's going to be really interesting.